Hi everybody, welcome to this webinar. I'm Shane Smoleny from Wolftrader Futures, and this is a webinar today on the great market bluff. So I'm going to lay out a case to you why I think this market is in a very large scale bluff across multiple markets, multiple symbols, and we're going to lay that case out for you today. So first of all, I want to make sure that the audio is checking out and the video is checking out. So just make sure that everybody can hear me first, and we will get started very shortly. Just to make sure you hear and see okay, just let me know in the chat if everybody can see everything okay, and then we will get started here shortly. So welcome everybody. Thanks to our moderators for helping us out here, Ron and Pat. I appreciate that. And for everybody coming out today on your Saturday afternoon, thanks for joining us again for our latest adventure here. We talk about a new topic every weekend. We do have some overlap, so I'm going to have some overlap about last weekend's topic. But this week we're going to lay out what's going on with the market from an internal standpoint, and then we're going to look at other markets too. And before we get started here, I just want to let everybody know how you can contact me. You can reach me at Shane@wolftraderfutures.com. You can send me an email, and I'll try to usually get back with you within a couple of days if I'm not too busy, but I do get back to people even if it takes me a day or two to do it. You can go to the website www.wolftraderfutures.com, and YouTube channel here is Wolftrader Futures, and Twitter. That's a really great place to join. I highly recommend you join this. The free Twitter feed. It's just a good way to get notifications in the day. I'm starting to tweet a lot more now. If you're a subscriber, it's a great place to get information. I tell you when charts are posted, videos are updated, upgrades, all this stuff is posted in a live stream. So it's a great place to go just to get notifications. So I know some people are anti-Twitter, but you can create fake accounts and go there too. It's free. This one is free, and I've been posting a lot more there. So go by and check it out if you get a chance. And it's a great thing to have, I think, throughout the day to get these notifications. All right, so a little bit about the service for those of you who are new here. We have a service. We have multiple services. We have S&P 500 metals newsletter where we talk about copper, silver, gold, platinum. Energy newsletter where we talk about natural gas, oil, heating oil, and gasoline. Currency newsletters where we talk about US dollar, Canadian dollar, British pound, euro, Japanese yen, Australian dollar, and we also talk about the euro dollar. Even though the euro dollar is a financial, I don't have a financial newsletter, but I do cover the bond in the gold service. So if you join the gold service, which is all of these, you do get the bond. We're going to talk about that today. The double lunar profit cycle is continuing to plow out profits here consistently on the bond or the 10-year note. We follow the 10-year note, but I call it the bond just because we used to trade the TLT, which is a hybrid between the long and the short. So technically this is the 10-year note, but I just refer to it as the bond a lot of times for people, even though the bond is 30-year, the note is the 10-year, etc. So just to clarify that, because someone emailed me with a question about that. Cryptocurrencies, we cover Bitcoin, Ethereum, Litecoin, and Ripple. Stock ETF, we cover multiple stocks and ETFs from gold miners to the VIX volatility to Caterpillar to Apple to Tesla to Broadcom to Bank of America. Gold membership includes all of this. Plus you get corn and you get the bond. So that's a little bit of a bonus you get. We'll talk about that. In fact, corn is doing great with the double lunar. So is the bond. So if you want to get a live Twitter feed throughout the day, this is not the free Twitter feed, which I'll move away here so you can see this a little better. This is the platinum package where you get Twitter Live, Fedges 3.0, trade services. We had been doing some option spreads. We haven't done them in the last couple of weeks, but we will keep doing them. The fast Fed big runs, which I think this is going to be the premier service, the premier trading system, although it's getting a lot of competition from the double lunar cycle and the Fed use. Easy timer, which is these are just little trades that go on throughout the day, Paris trader, and then of course you're grandfathered for all future services. So you can see here that I keep adding services. So if you join and you're a platinum member, you get any upgrades included for life. So it's a good deal. If you sign up, you get all these packages. In terms of the future, if you're looking forward to the future, there's a lot there. Quick disclaimer here. Trading commodity futures involves a substantial amount of risk. Past performances are not indicative of future results. This service is an educational service designed to go with the Trader's Guide to Financial Astrology, which was a book that I wrote with Larry Pesavento. So this is more of an educational service. I do post signals here and different lunar cycles and things like that. But it's really, if you want to learn about the markets, the Fed use, all that stuff, that's what this service is about. This is different than my firm, Trading Ridge Analytics, which is separate. That's where I function as a CTA or a CPO, where I control accounts. I don't control anybody's accounts here. I don't know anything about subscribers. This is a newsletter. So there's a difference there. One has nothing to do with the other. Everybody gets the same data at the same time. Now, I would warn against using fragments here. I talk about things on the weekend, but we see huge fluctuations in the Fed from day to day. This has been going exponential in the last couple of months. So just be careful about that. Now, the double lunar cycle is given to you at the beginning of the month. That has nothing to do with the Fed. But yeah, so just to let you know about that. Profit graph history. So I just want to put this out here as a disclaimer because I know that you can go anywhere on the internet and you can find profit graphs and back tests, and everyone and their mother has a profit graph to show. But what I'm showing you here is what has happened, what has actually happened. So these are like posted signals. These are real signals that we posted on the newsletter and through Twitter. So whenever I show you these charts, it's not a back test. It's not, it's just exactly as it happened for the subscribers. And all of this is time-stamped on the newsletter and Twitter. So if you look through back issues of the newsletter, you'll see all these double optimized lunar cycles. They're all exactly posted as they were in the newsletter, and they're also posted on Twitter. So they're time-stamped. All right, so more terms of service. We don't share your information, so I don't ship out your information to people ever. I don't share it. I've talked to you about this before. A lot of services have come to me, or organizations that wanted me to speak, but they asked me to give my subscriber list to them or to share it with them, and I'm not going to do that. So, oh well, I guess I'm not going to speak at those conferences. I'm just not going to do it. Okay, I don't like it when big tech shares my information, and I get all kinds of mails or calls or whatever it is. So I'm real big about that. Even if you sign up on Twitter, everything is, people sign up with different accounts that aren't their names because they want their privacy. That's fine. If you sign up, if you get emails, that means that you physically signed up. So you're not going to get spam or anything like that. Like, you signed up for the list, and that's it. The main terms of service is that you understand the risk, because this stuff is risky, especially with the S&P, with what's going on with the Fed, with these vertical wall moves that we see. It's very risky, and it changes all the time. They're doing new things all the time that they've never done. So I try to track this and keep you guys posted in terms of what's going on. All right, news and events. We do have the user guide question and answer format. The S&P Easy Timer is trading with S&P and gold on the Easy Timer. We're running a new algorithm this week, so I'll let you know how that goes. Solar cycles are updated for the next 4 months for S&P metals, energy, currencies, and crypto. So that's online in the gold members section. So if you want to go check that out, it's in the gold members section, where you can get all of these ahead of time. Now, if you're a member of a newsletter, you're going to get these every month, but you're just going to get 1 month at a time. If you're a gold member, you can get 4 months at a time with the turning dates and the seasonals. Streaming crypto is here. I'm looking to add Cardano next. That's coming soon. I've had a lot of people asking about it, but I need to get a few things updated, but that's the next on the line. Double lunar cycles are coming to stock ETF. That's actually going to be Apple. So next week, I'm going to have this for Apple. I have the double lunar cycles now on the charts, but I'm actually going to have the graphs with the exact turning dates on them optimized. It's actually a triple optimization that I do. But that's coming out next week for Apple. So just to let you know, the November newsletters are out. So now's a good time to try it out. If you want to try it out, you got a week to try it out. And we're going to talk about some profit graphs today. And then working on live streams for the actual website itself. So instead of YouTube, for subscribers, my vision, okay, one of my visions is to be able for everybody to log on to the member area, and then we would have a private stream, because I'm limited here with the streams because I give general information, but I can't give the subscriber information, like in terms of the exact turning points, things like that. So what I do is I make update videos for S&P a couple times a week, but it would be a lot cooler to have a live stream where we just log on to the site and we talk to each other. Lunar cycle profit graphs are listed in the S&P homepage, so you can log on and see those now. So I told you guys I was going to update one graph a week for these webinars. So this week I updated the gold miners, Fed Juice 3.0. This is the most successful Fed Juice. That's why I picked this one just to show you. This is available in the stock ETF service. So if you want to check that out, it's available in the stock ETF service. It's up 36.4% year to date. And again, these are the exact posted signals that everybody gets. They're posted in the daily update. They're posted on Twitter. It's everywhere. It's timestamped. So I just want you to be aware of that, because I know there are profit graphs everywhere all over the internet and everybody says something, but this is what we actually gave to you as a subscriber. This is what people got. This is the real thing. Like I said, the Apple double optimized Lunar is coming next week for Apple. Best RSI upgrade, I'm going to talk about that. We've upgraded the best RSI on the closing bell so you can see it. There is a new development here, which I cannot show you the graph on the webinar, but there's something called the hottest cycles. This is I think it's a breakthrough. We're using heat maps to figure out the most dominant cycles, and we get one big cycle graph. And so we have it for S&P, gold, and Bitcoin. So I can't show it on the webinar here, but it's a very, very interesting way to look at. It's searching through thousands and thousands of cycles and planetary aspects, and it's finding the ones that are the hottest, running the hottest. And some of these run hot for 3 or 4 or 5 or 6 months. It's not just like last week. So I have this for S&P, gold, and Bitcoin. They're going to be coming out for pretty much every symbol eventually. But it's exciting because the S&P turned on the dime with this thing last week. It had it at a high. And so I'll talk more about that in the market update, because I can't really give that stuff away online. But it's there if you want to take a look at it. The Bitcoin Big Runs is available online now. So we have our first trade on with the Bitcoin. So there's a lot going on here, and I'm going to get into this and go over it with you. And we have an intraday cycle too, which I'm going to talk about this week. It did really well this week, and I'm going to explain to you why it did well, or why I think it did well, and we'll keep talking from there. Now, here's the actual fast Fed big runs. So we have S&P 500 online. We have oil online, gold online, corn online, Bitcoin online. These are all trading right now. So I'm focusing more on the short side on these. So I'm looking to take mainly short trades with these, even though they trade long and short, because I'm so concerned right now about just the overall status of markets right now, which I will get into later on into this video. But the euro has been very successful in the past, so I'm looking to possibly bring that back. The Japanese yen and natural gas. All of these trade on micro contracts. So these are really small trades, but they have long runs. They have runs that could be up to 8 days. So anyway, so good to see everybody here. Gary, EKS, thanks for coming out to see us today. We got a lot of the TFNN crew out here, so thank you for joining us. If you guys have any questions, go ahead and post that in the chat, and I'll try to get going with you as soon as we can. So I'm going to talk about the best RSI upgrade. So for those of you who know, I have this best RSI, which gives you buy and sell pressure. But on the actual closing bell now, it's a little bit different. I'm going to get out of the way so you can see this. But you can see here, what I do here is I have the actual point to where it creates pressure. So this is the lever here on the closing bell. So for example, this is copper. So if the RSI drops below 81, it gives you buy pressure. So this is the last RSI actually posted on the chart here. And if it's green, that means it's buying pressure because it's below 81. If it's red, that means it's above the RSI. So it's just another way to look at it, but it gives you like a bird's eye view. If you're just going through the closing bell here, you can see very quickly, okay, that's sell pressure, that's buy pressure. on the short term. Remember, this is a very, very short term tool, but I think this helps you because you can just look on the closing bell and you can quickly size this up very quickly. Oh, okay, that's giving buy pressure, that's giving sell pressure, etc. So it's just a way to look at that from a different perspective, but I think it helps because instead of just looking at the chart, you actually see it on the graph. The only thing about that RSI is that it does flicker around a little bit. That's why I recommend that people follow this at home, but it's just something that we upgraded. So that's what's going on with that. Now the S&P intraday cycle, this is something that I introduced, and I think a lot of people are going to like this. This is for the short-term trader. It gives you rolling movements, okay? So let me explain to you what's going on here with this, okay? We had a good week this week. The week ending 11/12, it was up about 40 points net on the S&P. This trades 24 hours a day. I think day traders are going to like this. This is available in the S&P newsletter. Now, the Fed is beginning to loosen their grip, and we started to see markets move a little bit. It wasn't so much the control, up, control. It wasn't so much that this week. We got a little bit of a pullback. We did get that run up on Friday. But this is causing some rhythms to return to the market. So when the Fed takes that grip and starts to loosen it just a little bit, you start to see some natural rhythms come back. And so this is what we saw. So I'm going to show you the graph here. This is what it looked like this week. And this is the actual, this is the graph that the S&P subscribers get. It's a rolling graph. This is an intraday graph. You get this ahead of time. This is not a stochastic of price. This was given to everybody ahead of time. And so these represent the turning point. So this is a buy, this is a sell. So these vertical lines here, I give these ahead of time. And then the graph is down here. And again, this is not from the chart. This was given at the beginning of the week. I know it looks like a stochastic of the price, but that's not what it is. The market followed this this week almost perfectly. Not almost perfect. There was a couple losers in here. The first one started out as a loser, but the point is that you can see as this short cycle rolls into here, the market pretty much traces this out. So you can see the market traces this out here. So I think this is a really good tool. This is still experimental. Like I'm playing with this. I'm posting it each day, but you can see here that these rolls they show up in the actual cycle here. So I think this is really helpful for day traders, like people who want to see the natural flow of the markets. Again, this was all given before the week started. None of this is based off of price action. And you can see it rallies up and the market rallies up. So it followed it very well. It had a good week. I have my theories about why that's true. I'm going to share this with you. And again, everything that I show you here is evidence-based. So I talk a lot about the Fed and the Fed juice and all this stuff, but keep in mind, guys, this is not just some theory that's out there. I'm following specific data, like hard data. And that's the thing. And people ask me all the time about, what is the Fed doing behind the scenes and all of these things. I don't know what they're doing behind the scenes, if they're doing anything at all, but I do know that we can track the balance sheet and the data that they give us. So I just want to clarify that we're following everything that's going on. Now, let me show you the profit chart here. So this is the profit. This is an optimization of the 4 to 6 day cycle. What I want to point out here, there's two boxes here where things kind of run low here. You can see here, this is the profit. So just to clarify this for you, this is the S&P 4 to 6 day cycle. This is this cycle here, the intraday. And again, this is available currently for S&P subscribers. It looked like crap when the Fed was running it straight up, but I'm going to explain to you why that is. This goes back to, or why I think this is why I think it is. This goes back to early May. Now there's a couple, this is the profit graph here. Now there's a couple times where it runs down here. You see where it kind of runs flat and then it runs back up again and then it kind of runs down here. Well, in both of these situations where it was running down here, this was huge Fed intervention. This was a pullback that we had going back into last June when they came in and started dominating the market again. So the natural rhythms of the market die off when the Fed controls it. When you get these huge vertical runs like we've seen, there's no rhythms. There's just the Fed coming in every day and controlling it. So what happens is when you have a cycle like this that runs off of natural rhythms, it's not going to work. And so what we saw here is, and this is, there's no way to even optimize this across the Fed because there was no rhythms. When they're coming in every day and pushing it higher, there's no rhythms to the market. But notice, you see how this starts to run up here all of a sudden? That's because the Fed's loosening their grip. And I'm going to show you directly that correlates to what the Fed is doing. So This correlates to the data that we're seeing. When the Fed starts to pull back, the market starts to breathe a little bit. It starts to show some natural rhythms. It starts to show a little bit of the natural cycles. And so this is why I think it did so well this week. The Fed starts to pull back. We had that day where there was actually the Fed was closed. It was a holiday on 11/11, and that's why it starts to work again. So it's tricky with the S&P because it's like no other market. You have to. It's like game theory. You're trying to figure out what is going on here with the Fed. But that's why I think this took off. It did about 40 points this week, and I'm going to continue to post this. It is experimental. It is new, but I think people like it. I've gotten some good feedback from this. It's available in the closing bell. So if you guys go to your closing bell, you will see these with the buy and sell points at the beginning of the week. So I'll post this like tomorrow. It takes me a little bit of time because the way that this works, I have to like change the clock and the date on my computer to push it out into the future to trick the program to do it. So it takes me a little bit of time and it screws everything up. I have to reboot and all this stuff. But um, I'm looking to put that out tomorrow. So if you're an S&P subscriber, that will be coming out tomorrow. If this continues to have success, which is the first week, this is the first week it started to have success because the Fed's pulling back. I will look to put this for gold and other symbols to Bitcoin. I know those are the big ones like S&P, gold, Bitcoin, and oil. So that's just like a little subplot of what's going on in the background here, but that is available to all S&P subscribers. So you have this if you're an S&P subscriber. I think it's pretty cool. You can see there are periods where it doesn't work, and the Fed's coming in very strong. The rhythms are gonna be disrupted or muted, but most of the time it does. Most of the time it's pretty good. And it just gives you like an intraday backbone. It literally tells you like, hey, 1 o'clock p.m., 4 o'clock a.m., it tells you more or less. Now I want to talk about the gold miners because this was something that I told you I updated. This is our best performing Fed juice of any Fed juice. This is available in the stock ETF service. This is what it has done. It's done pretty well. It has periods here. This is going back through last December. So we are coming up on about 1 year on this. But this is a system, the Fed juice, that trades long and short. And this is gold miner, so I'm going to bring this down a little bit so you can see it. So the most successful Fed juice trading system we have, it does have periods of congestion where it looks like it's not doing anything, and that's from like 2 or 3 months. It looks like nothing is happening, and then it just takes off again. This is a long and short trading system, trading on the Fed juice. It's up 12.85 points. That's about 34% for the year. That's with no leverage, just trading at long and short, long and short. It's a pretty simple system. The trades can last anywhere from a couple of days to a month. They're long, these are longer term trades, but this is our most successful Fed juice. I love it. I love gold miners. This is my favorite Fed juice to trade. And again, it's very simple, guys. It's so super simple. It's on the chart. These trades last for long periods of time. Now, I envision the other Fed juice. There's some other Fed juices like Tesla and things that are kind of out there. The Fed juice did not like that whole Tesla rally, and we saw why Tesla collapsed. So I think those will come into balance. But this guy is proven, and it chugs, man. It chugs and chugs. I love it. These are the trades that were all posted. These were all posted on Twitter and in the newsletter, guys. So you've seen these. Okay, double lunar cycle profit graphs. I'm going to update it this week just to show you a couple. Each week, guys, I'm updating a new profit graph for you. So if you're a subscriber, you can go to the website and check these out. These are exactly posted. This is the S&P 500. This was this week here. I just added on these trades. It's up 446 points since going back to about March. Okay, so this has been very successful, even with all of this crazy Fed stuff. What happened with the Fed was the moves just became more amplified, but this still picked up generally the correct directions. We had this really steep drawdown here. I mean, really steep here. This was during the first sell-off. But notice that it picks this up and it picks it up in spades and goes back up. Because remember, as the volatility is increasing, whatever can go down can go up just as fast. And so that's what happened here. So this has just been a very successful system for the S&P 500. And we're looking at it over 8 months of data now on this. And I have gone through periods where I've worked on these optimizations. I work on them all the time, but I have a very specific algorithm now that I have like a strict checklist that I go through because it's kind of like finding the needle in the haystack or the correct combination, the way that you optimize these, it has to be done 3 different times to get these kind of performance results. Okay, so that's S&P. This is the bond, sorry, this is the note. This is the 10-year note, not the 30-year bond. Just to clarify, I know people are like getting picky with me about this. And again, the reason I called it the bond is because we used to trade the TLT. But notice it's had another really good week in all this bond chaos. This was picking up the trades. It's up 5.73 points on the bond or on the note going back before back around March. It had a period here where it drops down. This is where we updated all the algorithms here. This is where I really, I mean, it's a matter of tweaking and getting, I mean, everything from the optimization algorithm, the amount of data that you use in the past, the sample periods into the future. It's there's so much to look at, but I have a combination here now and it took off and you can see it's doing very well. So this is available in the gold members section. Now I've had a lot of people ask me about the bond. Will you start a bond service? Will you start a financial service? Maybe. I mean, I have so many services now that it's kind of getting saturated, but this does exist. We do trade the bonds and the gold membership and the platinum membership. It's a very successful market for us, as is many other markets. Canadian dollar is another example that's been off the charts good. So these are there. They're available. There's other markets out there. I know everybody focuses like a moth to the light on the S&P, but that is really one of the worst markets to short of anything. It's a tough market, okay, with the Fed. These markets are a lot easier. When they go both ways, it tends to do a little better. Now, I will point out here that even with the Fed, the double lunar has done pretty good with the S&P. But you can see it's a little more choppy, it's a little more volatile because there's the natural rhythms of this get disrupted with all this intervention that's going on all the time. The other markets, not so much. You would think the bond market would be a mess because of what the Fed is doing, but this one trades a little cleaner than the S&P. And there's many more examples, guys. I can't go through everything on every webinar, but what I can do is I'm updating about one a week. And so they're getting big. Even Bitcoin looks amazing. I talked about that in a previous webinar. Next week, I'll talk about a couple more, but I just wanted to give everybody the general flavor in terms of what's going on here. Okay. Question. Why did you stop doing the TLT? Okay, so Gary's asking me about TLT. I stopped doing TLT because I switched mainly to futures. But if that's something that you guys want, I can look into it. It's just kind of a redundant thing. It's kind of redundant to trade the 10-year note and the TLT. But I can look into it if you guys want to. If you're a gold member or platinum member, if you want to look into that, possibly the stock ETF service. But I kind of want to. I feel like the 10-year note also trades cleaner. So that's another reason. But I can look into it, guys. If you guys want to look into the TLT, I can look into it. But we're just getting to a lot of different things here. Questions here. EKS asks, why are the rates going lower if the Fed says they will begin tapering? It needs to talk about copper. I'm very bullish on this one. I'm not covering copper today. I can make some general comments about it. But the rates going lower. Okay, so this is an interesting dynamic. I'm going to talk briefly about this. The Fed did a first of all, they've done a magnificent job of getting this market off the lows since COVID. It's just been incredible what they've done. The U.S. Fed has done a very good job of staying ahead of the curve on interest rates. But this is the first time now where you're starting to see some other banks like the Czech Republic. You're starting to see Bank of Mexico. You're starting to see other banks raising rates. So I think that this might have something to do with the amount of bonds that they're holding on their balance sheet. They're essentially long the bond, so that creates a kind of a conflict. So that could be part of the issue. Another thing that you have to remember is if you get a panic, you can get short-term reactions one way versus another. So you could get a short-term reaction one way from a panic standpoint. People could try to buy the bond if we get a shock, and then eventually it could come back down again. But it's kind of cloudy from that perspective. You might just be seeing short-term shock reactions. Also, the dollar got really strong on that inflation report. So there's all of these cross currents going on. But to summarize that, at some point, if the other banks around the world are starting to raise their rates, we're going to have to we have to keep pace with that. So at some point, I think that will outweigh the situation. But the Fed is essentially long the bonds, so it's a weird conflict, it's a weird dynamic that's going on right now, where you have all this tug of war going back and forth. Okay, S&P summary. Um, okay, so Gary says EKS, I don't use futures, so I'm limited to what I can. Well, Gary, just keep in mind we have the stock ETF service. You have gold miners, you have Apple, you have these other ETFs to look at. So you can trade ETFs with that. You could trade TLT with the 10-year note. There's no reason you can't do that. The 10-year note, like if you do the double lunar cycle, Gary, if you look at that double lunar cycle, this what I showed you right here, you can trade the TLT with that. There's no reason you cannot trade the TLT with this. They're going to follow each other. The TLT is a hybrid. It's kind of a long and a short hybrid, but they call it a 20-year. But this should run great on the TLT also. So just keep that in mind, guys. These do have some fungibility between the different markets, but look, this is just fantastic results that we're seeing here. So there is some crossover here, and these are longer term swing trades, guys. These trades are lasting 3 to 5 days at a time. So just keep that in mind. And then you can also, if you're talking about this right here, the double lunar cycle for the S&P, you can trade the SPY with this. You can trade the SPY ETF with this. There's no reason why you can't trade the SPY with this. There's nothing to stop you. These are longer term swing trades. So, I would say definitely this is fungible. This is fungible with the SPY. This is fungible with the TLT. You can interchange these. So each week you're going to start to see more and more of these graphs, so you can decide for yourself what you want to do with that. I'm just posting these results for you guys to see here. Okay. All right. So that's why we have these webinars, guys. I need to hear your questions and your feedback, and we will, like I said, my goal is to get this to our actual website. So S&P 500. So I've told you guys a lot of this. We have our own perspective on this. So since 2009, I focus on what the Fed does, not necessarily what the market is doing. There is a solid evidence that the day-to-day influences by the Fed are affecting this market. So I follow the evidence. This is not just some theory that I have, or people say, oh, well, they control everything, and the Illuminati or whatever. This has nothing to do with that. This has to do with data that I collect every day. So, my background is technical, it's engineering. I focus on data and I create these trading systems. Okay, so the Fed is following, market's following the Fed lockstep. I believe that the sell-off caught the Fed off guard for sure. They didn't expect it to be that intense. So they started pulling back in July, but then there were these record surges that came off the lows, and they pushed us back up essentially. But I think that's a bluff. I'm going to talk to you about why I think that's fake. And the Fed internals did turn down off the upper channel like I thought they would. The taper is coming now. This is funny because people are asking about the taper. I've been checking these schedules. I don't see them reducing yet. I looked on the mortgage-backed securities. It's the same schedule that they have from the beginning of the month. I don't know. Maybe the schedule is they're going to have buy up to a certain amount, but I don't see it yet. I don't know. They're supposed to start on the 21st. I don't see it. I check every day, but we'll see. We'll see by the actual purchases. I think the Fed's counting on positive seasonals, but these have failed before. So when we look at the Fed, essentially, if there's no Fed use, there's no rally. It's that simple. Now, we can get periods where it hangs around and hangs around and hangs around for a few weeks, but eventually it's always true since 2009. So this is something that I really believe in, guys. And one of the things that I'm telling you here is I'm following this data, and I'm trying to get the word out about here, because I don't think all is well with the market. I don't think all is okay with the market. And I'm bullish a lot of the time. You guys know that in 2020 in March, I was bullish on the S&P at the lows. I don't think this is the time to be bullish. I'm very concerned right now with what I'm seeing, and I think the taper will have an effect. I don't think the Fed wants the taper, to be honest with you, but I think we're just in a situation with the inflation that they have to. So I'm just kind of calling it as I'm seeing it, and I'm trying to spread the word out. Now, people have different ways that they look at the market. You have cycles and transits and Elliott wave and divergences and sentiment. I mean, the list goes on and on. Even Basil Chapman has this incredible Chapman wave that he does that's very, very accurate. But all of this stuff works in the context of the Fed. So when I'm talking about longer term trends, it all matters what's going on with the Fed. And so that's why I look at it, because it's really like the root cause of what's going on. So this recent rally off the lows, it's juxtaposed against long-term weakness. So that's the thing. So I think the Fed taper will lead to a decrease in the internals, and that's what I track. So the Fed taper is coming. I'm going through this quick, guys, because we did this last weekend, and I'm trying to keep these webinars flowing. So um, anyway, so yeah, guys, by the way, if you are new here, I'm Shane Smoleny from Wolftrader Futures, and we're talking about what I call the Great Market Bluff today, and I'm going to show you why when we get to this. But go ahead and give this video a thumbs up. I'd appreciate it. Subscribe to the channel and subscribe to the Twitter. Go over to that Twitter right now. I'm going to show you again where that is. The Twitter is going to be at Wolftrader FUTU1, and that I'm starting to post to both Twitters now. I have the private Twitter feed for the Platinum, but I'm starting to post to both now. So like quite frequently. So check that out if you get a chance. And so we've been going through a lot of information, but the Fed taper, it is coming. And so even though they haven't posted anything yet, I'm looking, I didn't see anything. It looks like they're just, I don't know. They said they were going to start, but I don't see it. But okay, I'm going to take them at their word. I don't see any plans yet. I looked at the there's a schedule. They put out the schedule. It's not there yet, but let's assume that they do it. I think they will. So 1130, these purchases as a percent of the total, it's pretty light in the beginning. But then as we get about 3 months into this, the markets are going to really start to feel this, because as a percentage, you go from about 12%, and then each month it cuts in deeper and deeper and deeper. And I think you're really going to start to see it here. I think it's going to show up. I don't think the Fed wants to taper, to be honest with you, but it's just the inflation thing it's a problem, and the other banks raising the interest rate, it's a problem, and we have to keep pace with that. So I think it's coming. It's 120 billion per month, 80 billion treasuries, 40 billion mortgage backs. But again, I look at the schedule and I don't see anything yet. So I don't know what they're doing, but they're going to go 15 billion per month, 10 billion on treasuries, 5 billion on mortgage backed securities. So, okay, I believe them. I believe they're doing it. I just think they're dragging their feet on this. They're just like, oh, maybe December we start, and it's set to end by June. Okay, let's talk about our 3 important market bluffs. So this is what I call bluffs. And there's more. There's some divergences forming that I want to talk about, but this is a bluff. So the first one I want to talk about is Tesla. I have been talking about that the Fed juice on this it never went into a buy on this, never. And it did this big run, and everyone's like, "What's wrong with the Fed juice? It doesn't work." I'm like, It doesn't like it. I mean, I don't know. It's saying that rally is fake. It's fake. It's a fake rally. Um, and I said, let's give the Fed juice some more time on Tesla, because it just doesn't like this rally. Period. Now, the reason I talk about Tesla is that this is an alpha leader. Usually, we think of technology as being like the driving leader here. Um, so this is like a separate category. Like, it was like there was technology, and then there was Tesla, right? So this is the alpha leader. This is a big deal to me. I thought it was telling that I know Musk had to pay off something, but what does that tell you? That he's selling off at the peak here. He knows it's not real. Now, he may have needed to raise capital and all of that, but he knows it wasn't real. It's a bluff. It's not real. When we look at this here, he sells off these huge stakes, the worst week in 20 months. And I told people the Fed juice does not like this, guys. It doesn't like it. It doesn't like what's going on with Tesla. It just doesn't like it. I don't know what to say. Sometimes the Fed juice hangs there for weeks or sometimes even months, and it just says no. And it said no on Tesla. And so I think this was all just a big bluff here. I mean, this was all nonsense. Okay, so there's a big gap down here at 910. And the reason I talk about Tesla is that this is a leader. This is what I call the alpha. When you want to look for alpha in a market, this is the alpha. Like we used to think of technology. No, this is where it was. I would say Bitcoin too, but that's like a whole thing. But I think this is all fake. I mean, I said this from the beginning. So there's a gap down here at 910. We got to be careful about this. The market cannot pretend like this didn't happen. It did happen. So we, came all the way down to this 1,000 level. There's a gap at 910. So beware of this, guys. Beware. Everybody wanted to own Tesla up here, and look at this. Okay. So just wanted to point that out. That's the alpha leader, and we cannot ignore that. That can't. The genie's out of the bottle. Okay, you can't. It's not going to go away. That's there. Whether the S&P wants to try to rally back up and touch the highs again, this is here. This was the alpha leader. And so I look at this as a leading index right now. It's not an index, but I look at it as a leading. It's its own phenomenon. The next bluff is Caterpillar. I would have thought that Caterpillar would have been just going through the roof on this infrastructure deal. And what we saw in Caterpillar was that it gaps up and then it comes back to the gap here. So, you know, look, it's still kind of trending up here, but still relatively weak, still not at the highs. We had that big gap up and then it came right back down to close those gaps. I would say that's a disappointment. Okay, you would have thought that this would keep going up here, but you know, I'm concerned about that. Because I think that's a real world company. It's not Tesla. I mean, Tesla's real world, but it's a lot of hype and it's about dreaming into the future about, you know, alternative energy. And this is like the reality of on the ground, the infrastructure. So we have to watch Caterpillar as it is a very important leading stock. And this is available in the stock ETF. These are, by the way, we have double lunar cycles for this for Caterpillar, and this is coming out for Apple. So the biggest one of all here is the Fed internals. And let me just show you this. This was a graph. I showed this last week here. And this is 2018. And the reason I like to show this is because, yes, we are coming into these positive market seasonals, and usually the market likes to go up, but it's not always. So there was a case back here in 2018 where the Fed was really starting to taper into here, and the market starts to fall. This is during holidays, and you can see I'm just showing you what the Fed activity is down here with what's going on with the market here. But it basically was following it lockstep, as it usually does. And so here's the flows of what the Fed is doing, and the market starts falling down. Now, the market calls the bluff here, and you can see the Fed blinked here. You can see the Fed got to this point right here, and they blinked. They were like, "Damn, we can't do this anymore." So the Fed starts coming back in, and that was the end of the decline. So this is what I talk about when I talk about context of the Fed. I'm not talking about micro moves. I'm talking about the bigger context of what's going on. So the market calls the Fed's bluff here. They called it, and the Fed blinked. This was when Powell first comes into office, and then they start surging again here, and then the markets come off the lows there, and yeah. So it doesn't have to be positive because the Christmas is here or whatever. I mean, usually it is, but it doesn't have to be. Yeah. So Pat says, even though the infrastructure bill is scheduled to be signed Monday, I heard it will be spread over 10 years. Yeah, exactly. It's spread over 10 years too. Look, we need an infrastructure bill. I mean, this stuff. It's amazing how that type of a bill, it always manages to never get signed into law. So that needs to happen. I mean, I think that's a positive for the country, for the economy. But I just wanted to point that out. Okay, so here's the big bluff here. I'm going to try to bring this down here. This is what I talk about with the bluff. So let me explain to you how I see this. This is just how I see it. Everybody sees it differently. But, you know, my real area that I study is what's going on with the Fed. Now, this is the Fed here. Now, they're in this channel that's decreasing here. Okay. I think that they started this back in July. I think this is where the bear market starts here, even though I know it pushed to new highs. I know what I'm saying is in terms of what the Fed is doing, they start pulling back here. Now, notice it starts to come down here. And this is when they start to freak out, okay? So they surge. They had these huge surge off the lows here, and I don't think they were planning on this. Then they had the day the market shut down for a market holiday here. Same thing here. We had it this week, and then they surge again, okay? And so this is what I call this is a bluff. Like they're bluffing. Because I didn't think they were going to keep going higher and higher and higher. If I felt like they were going to keep going higher and higher and higher, I would be bullish on the S&P right now, okay? I would. I was bullish in 2020. I've been bullish most of the time since 2009, but I truly feel that this is a valid channel, and they turned off the top of the channel here. So I think this was a bluff. And the reason I say that is I don't think they have any intention to keep going higher because they can't, because there's a taper coming. You know what I mean? Like it's pretty obvious to me that this was a last hurrah to try to convince everybody that everything's fine when it's not fine. Okay, and so this is just my perspective. Again, everybody's got their own perspective and their own opinion. That's fine. But based upon what I'm looking at here, it came right off the top of the channel like I expected. This is what I expected to happen. I didn't expect it to keep going higher and higher and higher. So, and this is why I think the market started turning down. Now, Friday it had a nice surge into the close, but we'll see what happens here. Um, Here's another graph here. It's the same concept here, just in the black background. I think the taper is looming. I think it's coming, and I think it's going to have an effect on the markets. How strong of an effect, we'll see. But I think pretty strong here. This was another graph here that I showed where just the intensity of the responses by the Fed. And again, EKS is pointing out that the inflation is coming in at, yes, like 30 or 40-year highs. So here's the Fed with their heroic responses back here. You can see back here in February, this was a huge response here. Letter A and then letter B, they had this huge pullback here. This is in July. I think this is where the bear market starts. And I was correct. They came right off the top of that channel. They had these huge heroic responses off the lows from C and D here. This was very impressive. And look, they're trying to help out the market. They're doing their best to help out. But what I'm saying is, and I think the Fed has done a great job since the March lows. But what I'm saying is, because you have this channel here, which I think is the dominant move of the Fed, I really believe, and it's following into this channel beautifully here, okay, that I think that they're going to keep going lower here. And I think ultimately the response is going to be negative. So even though they had some really, really positive moves off the lows here, I just think that because of what's going on in the world with inflation and with interest rates rising, this has to come back. This has to come back, okay? So I don't think they want to, but I think it has to, okay? Yeah, and then Powell is up for renomination. Who knows what's going on? There's all this internal conflict going on within the Fed. You guys, I mean, I want you to think about something for a second. There's all this insider trading scandal. Why do you think that stuff was all leaked? I mean, you're talking about the most secretive agency, one of the most secretive agencies in the government, and all of a sudden they're exposed for insider trading. Who did that? Like there's some kind of a battle going on, like an internal battle. So I don't even know if Powell would be renominated, to be honest with you. There's some kind of a struggle going on. I think he's done a pretty good job, to be honest with you. Outside of the insider trading, I think he's done pretty good. I think the last 3 Fed chairs have been very good. I think Bernanke was incredible. Yellen was very strong, and I think he's pretty good. But who knows what's going on there? But yeah, the market could take that negatively if they change Fed chairs. I always wonder, like, how did that get out? You know, somebody leaked that. You know, there's something going on there. I don't know, but I found that to be very interesting that was leaked. Very, very interesting. Like, how was that leaked? Like, what happened there? Somebody did that. Anyway. All right, so let's talk about fear and greed here. So fear and greed, we're currently at 82, guys. It's still super high. That's pretty elevated, okay? It reached 87. That's high, 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 high. The RSI and the S&P reached values we haven't seen in like 5 years. Everything's out of bounds right now. Previous highs only made 30 to 50%. This has been a missing component. So this is from CNN. You can go find this. It's pretty easy to find. They look at numerous factors. We're at 83 right now, but take a look at this trend line here. This is trending lower. So fear and greed across time has been decreasing at each peak. Now this is right before COVID here. This is COVID. It comes up here, it makes the second peak, and then it goes down. I'll get out of the way so you can see that. It goes down, and then here we are. So we're kind of at this lower slope here, but it's definitely in a region where there's a danger here of this thing reversing just on the sentiment. Now, sentiment doesn't have to mean anything. I want you to know that, guys. This stuff can hang out at highs for years. Like we saw during the bull market, this thing can hang into the 90s for a long time. It doesn't have to be a reversal, but it's interesting just to pay attention to. It's just something to pay attention to. I thought it was interesting. Now, let me talk about another reason I think this is a bluff on the S&P. This is relative strength. So again, it's kind of like sentiment. It doesn't have to mean anything, but usually it does. So here's I like to look at the banks. I like to look at JP Morgan and I like to look at Apple. Okay, so let's compare the S&P here. So this is the bluff here. So this is your S&P going higher here from A to B, and then you can see JP Morgan is falling. And then the relative strength of these two is falling. Okay, so this is not a good sign. You don't want, and I think the banks got weak here. They're getting weak on the taper. This is going to affect their lending and their bottom lines. They don't want the banks don't want that. Banks, remember, when we look, let me explain something to you here about the banks. Banks like low interest rates because it's better business for them. Take a look here. So going back here to this last taper tantrum here. This was 2018. So let me give you a little bit of the backstory here. This was a time when Powell first comes into office, and he wanted to do these reverse repos. Why does he want to do that? Okay, so banks, Fed may raise interest rates, and the banks don't want to do it. So a lot of times the banks resist. So the Fed comes in and is like, okay, I'm going to raise interest rates. I'm going to do these reverse repo facilities, and I'm going to offer people a better rate to park their money with us than you are. And I'm going to force you to raise your rates because I'm going to raise my rates. I'm going to take your competition away. So it's kind of like this. It was a different reason back then versus now. Now the reverse repo it's a completely different reason because we had all these budget surpluses with the COVID stimulus. Back to here, they were literally trying to strong arm the banks to raise their rates, right? And it wasn't working. Okay, and so this is why this is a reverse repo problem into here. So there's all these layers with the Fed. I mean, we have treasuries, reverse repos, we have the mortgage-backed securities. There's all these layers that go on, but the bottom line is that the banks don't like that. They don't like to raise their rates. Anyway, now someone just saying, as one of Larson's, the taper, maybe that's why they want Powell out. Look, guys, I don't know what goes on in the Fed. I don't know anything about the politics of what's going on over there. I just know that I think he did a pretty good job. I think Powell's done a pretty good job, as did Yellen. And they were kind of continuing with Bernanke. Bernanke was like the all-time, that guy was, the stuff that he did and he figured out, like he was on another level because he had to figure all that stuff out on the fly during the 2009 crisis. I mean, he was incredible. And they kind of followed in his footsteps. I think they've done a pretty good job. But look, my opinion doesn't matter on this, okay? I'm just here to point this out to you. So here's the bluff again. So here's the banks. So I don't think that the banks, I don't think that the banks want that. So that's not a good sign that the banks are weak relative to the S&P. So again, I think that's a bluff. I think we need to see healthy banks. We need to see healthy technology. Technology is also running relatively weak here too. So S&P has been running higher. Apple's been running flat to lower. Again, it's one stock, but I like Apple because they have a very, very high cash to debt ratio. I think they're just a great company. I just think when you're looking at a bank, we look at JP Morgan. When we're looking at technology, if you pick one, you look at Apple. Okay, that's just my personal feeling, but neither of them look good for the S&P right now. So that's basically it. Okay, so that was just kind of like my thoughts on that, the bluff. Now I'm going to do a few question and answers, and we'll answer some questions here. I'm trying to keep these webinars about an hour because I know they get super long, and I'm trying to get more interactive with you guys. So, okay, so this is a question that comes up every week, but I'm going to answer it again. How do I get notified of the webinars? So if you're not subscribed to the channel, subscribe right now. There's a bell that you can click on the YouTube, and it will notify you of like future webinars. Twitter, Wolftrader FUTU1. I post it here, so anytime anything happens, if I go on a radio show, if I have a webinar, if there's a new product or service updated, if there's a video that's put out, I put it out here on Twitter. So subscribe there. There's a email list you can sign up to on the website. It's a free email list. You can sign up, or the S&P closing bell. I do post the link there. So if you're an S&P subscriber, you can go to that closing bell and you can see what's going on there. So there's many ways to get it. 7-day people, I got another email this week. How do I sign up for the 7-day free trial? So all of our services come with 7-day. You have to create an account on the Wolftrader Futures, and then you sign up for the service. It creates a PayPal account, and then you'll have 7 days to cancel. So, but that's just the way that it works, guys. It just, I can't keep track with all the subscribers. There's so many subscribers at this point that it's more orderly, it's more systematic. You know, back in the day, it was, 10 years ago, it was much smaller. Now it's so large. It really you need to be in the system. And if there's any issue, guys, the reason I like PayPal, I know there's a low level of trust with big tech and Twitter and PayPal, but I like PayPal because if there's ever an issue, like I can refund things very quickly with PayPal. Like PayPal gives you very total command over what's going on. So between the Wix notifications, like the notifications that I get, you can get that on your phone. You can communicate to me, and the PayPal. These issues can be, if there is an issue, it can be resolved within minutes. Like I'm very, very quick about resolving any issues, or if there's something that goes on, I can be on it with the PayPal. So that's where it is. So another question I get with all these indicators, where do I start? I would start with the double lunar cycle. Okay, it's very simple. Here is why I think it's so simple. When you look at these profit graphs here from the double lunar cycles here, um, these profit graphs, the reason I like the double lunar cycle is you don't have to look at the daily chart to see what it's doing. You know ahead of time what it is. Like you get this in the news, it's in the newsletter. Like it's like you have these signals ahead of time. So like it's simple. Like you know what the signals are. I'm going to show you what this looks like for a second here. I know I showed you guys last week, but I'm going to show you again here. I'm going to go into the gold member section and just show you what this looks like. So give me 1 second. I'm going to show you what this looks like here, and we'll take a look here. Okay, so this is the gold member section. So everything is summarized here, and again, we're adding more and more and more stuff all the time, and that's why it's important for you guys to kind of check out this webinar so I can give you an update. But double optimized lunar cycles for this is November. I'm going to go into October here and just show you. This was like last month. So you get these at the beginning of the month. It's already there. Like the signals are there for you. Like you don't have to like. It's like so you could fit it into your trading plan. So let's say that you trade Gartley and ABCD patterns, because I know that's a big trading system at TFNN, and it's a great one. And there's nobody better than that than Larry Pesavento. He's the absolute master of this stuff. But what I'm saying is you can fit this into your trading system because you already know ahead of time. Here's the 10-year bond. So this is what I was talking about here. These were the trades that were laid out last month. So when the month starts, you know what the signals are. So if you see a setup in here, if you see an ABCD setup, or you see, if you're doing Elliott wave, or you see something that you like, you automatically know the double lunars in a buy here until 11.5, right? And so that shows up on these already. And so you can see into here that this was this run into here. This was the run right here. You see this run right here? That's what this was here. So that's what this was. This 10.25 to this 11.5. That's what the run is. So I like it because you can't get any more simple than that. Like in terms of like, hey, this is how it is, and it's easy to follow. So I like that. Now the Fed juice. Now this is updated daily. I'm going to show you this one here. This one is updated daily, and you don't know what it's going to be until the day comes. You don't know if it's going to be a buyer or a sell until the day comes, right? I wish we knew that, but the point is these trades can last for weeks at a time. It's like this is a slow boat, the slow boat, okay, in terms of what the Fed juice is doing, but this is the best one. So if you like gold, miners, this is the one. Now, a lot of people don't want to hold on to trades for 3 or 4 or 5 or 6 weeks. Okay, I don't know what to tell you. This signal is what the signal is. It comes when it comes. I don't control this. You see how they're kind of weird? Like there might be a bunch of trades, right? You see like there's a bunch of trades, and then all of a sudden there's like 2 trades in the next 2 months. Like that's just how it is. I don't know. Like it's like the frequency is not like the double lunar is kind of more on like a rhythmic cadence. It's a little bit more of like the trades come in like a rhythm. But again, I like the double lunar because you're literally sitting there looking at, what's happening before the month starts. So again, this is the gold section. So gold members get all the double lunar cycles for every market. And there's so many of these. We're covering almost 30 markets now, but they're for the most part, these are successful. There are a few that are kind of going sideways, but I'm always working on this to upgrade it, and I'm trying to do my best to explain what's going on with each system, and I'm trying to show you guys the best ones to use. So when I'm posting these logs, I'm posting the ones that are having the most success. But again, I like it because it's simple. It's like simple stuff, and we can just follow that pretty easily. So I'm going to keep moving along here. Just a couple more questions here, and so we were talking about. Where do I start? Okay, so I said double lunar cycle is the place to start. It's pretty cool, man. I mean, you got a roadmap ahead of time. You don't have to really do anything. Like you know what they are ahead of time, and then you can get into the Fed use. You can get into all that stuff. But I just think look, it can't get any more simple than that. All right. Um, where do I find the double lunar cycle? It's in the monthly newsletter, the daily charts, which you get in your newsletter. So when you download your newsletter, the double lunar cycle is there. And then the gold member section, I just showed you that. That's where you log on if you're a gold member and you can see everything. You have like a complete command and view of everything if you're a gold member. If you're a platinum member, you have that plus the trades, which is the fast Fed big runs, which we're not talking about today. S&P trading log, where can I find it? When you log on to the S&P down here, it will say double lunar trading log. So I'm updating it weekly. So as we go, we update. We have about 8 months of data now. I wanted to wait until 8 months just because I felt like that was a good long enough period for us to get some data, because you just don't know until you get enough data. Because remember, on that double lunar cycle, um, there was a dip into here that we had. Like if we go all the way back, we had a dip. Like on the S&P, there was quite a big dip into here, but then it surged back. So you really need to get enough data to see that. I think it's doing great, and I think we have the protocol down. Someone asked me this: will will about those positive market seasonals? I think it was meant to say, what about those positive seasonals? Um, Let me talk about that. Usually, guys, the holiday seasonals are a positive period. Granted, it's true. Like Thanksgiving is usually positive. December is usually positive. However, there are times that the Fed pulls back that the seasonals can fail. It doesn't mean they will, but they can. Um, Final question here. This was one from last week. I got again. What is the taper timeline? When will the markets feel it the most? So we have to assume that they're actually going to do the taper, which I think that they will. And if that's true, we will start to see at the end of November, we will start to see just a little bit here. And then as we get into December, I think once we get about 3 months into this, I think it's really going to start to feel it. The markets are going to start to feel it. And again, I think those Fed internals are turning off the top of the channel. This is scheduled to end by the end of June. Now that's what it is now. I know these timelines can change, and they said they can change, but that's basically what it is. That's what they said they were going to do, and I believe them. I think that they're a very transparent Fed. To be honest with you, if you guys remember back to Alan Greenspan, that guy, like you never knew what he was going to say. He was a Pisces, like Neptune, that whole confusion, like everything with him was like, the guy took freaking bubble baths all the time. He's just like typical, like very Pisces, like very like you kind of had to like psychically read what he was saying. This Fed is very different. They're very clear. They're telling you what they're going to do, and compared to what we had with Greenspan. Greenspan was pretty good. I mean, he was a great Fed. I mean, he's basically saved the country in 1987, saved the world when they stepped in to stop the '87 crash. But it was harder to like. You kind of had to like read the tea leaves with him, and now they're pretty clear. So I think they're going to do it. I you know I believe them. Now things can happen. I mean, shocks can happen, and they might have to adapt. But I think they're good. They're doing a good job. I mean, they're just trying to help. They're trying to help out the markets, right? They're doing their best to help out, and they're now they have to deal with inflation. And to be honest with you, I don't think it's really fair that they keep putting all these mandates on the Fed. Like the Fed is like now that they have all this unemployment mandate, and now they're starting to talk about climate. It's like, dude, what? Come on, like how much is the Fed supposed to do? Like they've done a lot. They've already done all this superhuman rescuing of the markets. It gets ridiculous that we start to think that the Fed can fight climate change now. And all it's just crazy. Like it's they do plenty. They do plenty, and they do a good job at it. So. Um, all right, guys, so that's it for this webinar. I appreciate you guys coming out on your Saturday afternoon. Um, I know everybody's got plans and things going on. There's football, there's family events, there's kids events, and I really appreciate you coming out here and spending your Saturday with us. And I try to give us a little bit of a different view each week. And so when you guys write me and ask me questions, I think it really helps us get more topics going. So I can go a different direction. Like maybe next week I can go a little bit more towards crypto or something or whatever it is. But this week, this was this is the basic idea here. So I think that we're in a market bluff right now, and I think there is still significant danger here. So I'm going to read through some questions here. Um, so some people are just I'm reading here. I'm going to read through the questions. Trade what you. Uh, okay, so why trade? Invest your own account. You can with me as one best. Trade each newsletter and then post returns. I do post, guys. I post these. I post the graphs. These are all publicly posted. So I do have my own trading, my own accounts that I deal with, but this is a newsletter, so I don't really. It's just I'm giving everybody the information. You guys do what you want with it. I don't know. I mean, people have so many different interests in this, and I'm just posting this. This is all time stamped. This is all laid out on the line on Twitter. This is all laid out in the newsletter ahead of time. This is all documented. You go back through Twitter. All those timestamps are official timestamps. So it really, what I'm showing you, this is what's actually happened. It's really up to you. Whatever you guys want to trade. If you want to trade the bond, trade the bond. If you want to trade Bitcoin, trade Bitcoin. I'm just putting this out here, this information out here for you guys, and I'm sharing it with you to let you know, what are the hottest indicators, what are the hottest trading systems. But this is what actually happened, guys. So this is the actual results of what's been going on. Okay, whether whether it's posted on Twitter or whether it's posted in the newsletter. This is all posted before the month starts. Okay, so that's what it is. So that's what I'm trying to tell you guys. There's so much going on here. Guys, I have over 20 trading systems, just systems that we post here with the different services. So I'm trying to point you in the right direction to say, hey, look, man, you have this stuff in the newsletter before the month starts. Look at what it did. This is what it actually did. Okay, so that's what I'm trying to tell you guys here. Um, and now, you guys have to, everybody's got their own angle. So that's just what I'm trying to say here. So I'm creating the systems here. I'm writing the newsletter. And if you really want to get focused on specific trades, we talk about those in the platinum. The big runs are very, very specific trades with specific stops and limits. So it just depends where you are. If you're a platinum subscriber, those fast fed big runs, the oil has had 8 out of the 9 last winners on that. Very specific targets. We trail the stops down. That's a totally different ball game than what I'm talking about here today. What I'm talking about here today is just information that's published in the newsletters, and this is how they've been doing. Okay, and in terms of the daily Fed use with the gold miners, this is what it's doing. And then there's all these nuances too. For example, like when we get back into this intraday stuff, this is available now for the S&P. So it's a very easy graph to follow. So set up your own trading plan, set up your own, whatever you do. But this just gives you another tool to look at to look at. So anyway, so I'm going to keep reading these. Where should we go first each morning? All right. So again, Gary's asking me about where you go. So again, one of the things that I do on Twitter for the platinum subscribers is I post first of all, there's a platinum trading board where I post all of the trades for each symbol. Okay, so if you go to the platinum trading board, you will see there is a trading board set up for each symbol. Okay, then there's also I post on Twitter the big run summary. So those are the swing trades that we post on Twitter, and I post those each day. So throughout the day, as the trades get updated with the fast fed big runs, I post those throughout the day. So what I would recommend if you're a platinum subscriber is you should be focusing on what's going on with Twitter. And as I post these updates on Twitter, if there's an update made, you should take a look at that. Okay, so take a look at the platinum trading board. It's updated, so you'll get these updates on it. So I'm going to show you an example here. Just give me a second. Platinum trading board is It just essentially it summarizes kind of like what you see in the closing bell, but the Fed juice 3.0 trades, those signals come at the market close. And I tell you what they're going to be before they come. And then the double lunar cycles, you know those before the month starts. And then the big runs, the fast Fed big runs, I update throughout the day on Twitter. So you should be looking on Twitter to follow those as we go on Twitter. So I'm trying to keep up here, guys. Give me 1 second. I think I lost our feed here. Just give me a second. Okay, so I'm going to read it. I'm going to read it to you for I'm going to read the comments on another computer here because we're still streaming, but it seems like I've lost our stream here. All right, so briefcase indicator from Greenspan. Powell knows this is temporary. Inflation is a monetary. Okay. Um, okay, guys. So I think we're going to wrap it up here. If you want to talk about crypto and things like that, we can do that on another day. But I think we've addressed most of the questions here. If you have any more questions, go ahead and shoot me an email, Shane at wolftraderfutures.com, and I will do my best to respond to you. And once again, guys, I really appreciate everybody coming out on their Saturday. Come back next Saturday. We'll have another topic for another day. And I think that's basically it, guys. So have a great weekend, and I will talk to you soon. Thank you so much, guys. Peace out.